Oh boy, do we have an epic battle on our hands between two of the most famous stock pickers in the world, one being CNBC's Jim Cramer and also Michael Burry, who's famous for making him and his investors $800 million during the 2008 financial crisis. Jim Cramer, just before the FOMC meeting, said the bulls are back, it's time to start buying the dip. Now, opposite of that, Michael Burry simply made a tweet that said nothing other than sell. Now, after the FOMC meeting, the Fed raised the interest rates by 0.25%, which then sent the stock market and crypto on an epic run to the upside. The Nasdaq gained 4% alone, while Bitcoin ran up almost 7% in a single session. Now, this definitely made it look like Jim Cramer is right, and Michael Burry, who actually deletes his tweets a lot, this time, in fact, deleted his entire account. It's a question of why did he do this? Did he just get squeezed out of all of his position, lose his investors a bunch of money, or does he just not simply want to read the comment section because you know Twitter is going to attack the shit out of him after this as of right now? Now, typically, a lot of times when people have analysis, they're typically early. I'm reading Ray Dalio's book right now, and also if you watch the movie The Big Short, Michael Burry was definitely early and was actually down big before it eventually reversed and made him a lot of money. So now that's the big question as of today. Is this a temporary pump right now, getting everyone back on board for the bulls before there's a big rug pull and we pull back to the downside, or is the bull market back? We don't really know, but as of right now, it looks like Jim Cramer has just slayed Michael Burry and forced him to delete his Twitter account. So with that being said, guys, all we can really do is take a look at the charts and see what's going on, and that's what we're going to do in today's video. All right, what's up, guys? Welcome back to the channel. Again, this is not financial advice, just me, Cameron Foose, making some calls and analysis with an unbiased opinion about what's going on in the markets. And as of right now, the bulls are still in full control, especially after the FOMC meeting. We saw a big run to the upside. Again, Bitcoin ran 6.6%, while the Nasdaq ran 4% to the upside, breaking out over these previous highs here. And actually, if we look at the Nasdaq, it's actually looking quite bullish at the moment. Now, the question is this actually a bullish reversal in the US stock market? Is this a temporary fake out to the upside, suckering everyone in, bringing exit liquidity to the pro traders out there who are then going to take advantage of the next dump? We don't really know what's going to happen. As of right now, it's too early to see what's going to happen. But as of right now, we are closing above this actual level here on the Nasdaq, which is a bullish indication. We can also look at the S&P 500 closing up above both these trend lines, which is also a bullish implication. That doesn't mean the bulls are fully back. We don't really know where this trend is going to end up. Also, the US 30 is not in a bullish pattern of breakout quite yet. It's still consolidating. Also, on top of that, guys, we have a lot of news coming out tonight. We have Google earnings, Apple earnings, I believe Amazon earnings as well, which are going to be, a big factor in the direction of how the week closes for the US stock market. If we look at Meta actually reported better than expected earnings and is actually up after hours to about 180. So Meta is spiking big all the way up to this previous now resistance level here in after hours trading after reporting better than expected. Now, their earnings were still down quite a bit as with their revenues, but they actually beat what the analyst estimates were, and they also announced, I believe, a $40 billion stock buyback program, which is also very bullish for these stocks. So now the question is, do you buy into this euphoria and all this hype here, or is this creating a resistance area to start selling, and now it's a shorting opportunity? So these are the questions, and a lot of people who are inexperienced are probably going to take this as a bullish sign, and okay, now we start buying up here because this is the bulls are back, where typically you want to sell at resistance and buy somewhere at support. So it is bullish that they broke out to the upside, but I don't believe that is a buying opportunity. It's on a news announcement right into a resistance. Typically, you'll see they buy the rumor and then sell the news after this comes out, especially when the market opens today. Also, it totally depends on what's going to actually happen with the earnings from Google, Apple. I believe Pfizer is coming out as well, General Motors, or maybe General Electric. I think it's General Motors, but a lot of important news in earnings coming out today, which will kind of be the confirmation for a confirmed breakout above these levels, or the earnings are less than expected, and we do see some downside selling pressure after the earnings are actually coming out. We'll see what happens, and we don't know what's going to happen until those earnings come out. Looking at Bitcoin, I do believe we are coming into an area of potentially getting good to short as it's coming up into these resistance levels here at the 25K mark. Okay, we saw an epic run on Bitcoin. We're now coming into this level right here, which I do believe is a high probability shorting zone to take advantage of at least a 10% pullback on Bitcoin. If it did come into these levels, a 10% pullback would bring us back down to about 22,200, which could be a potential shorting opportunity. And then that would also retest now support level here on this actual descending channel, of which you could potentially take advantage of a short here. What actually happens from there, we don't really know. We also have the 22.4 to about 22.8 support here. And then the next supports are down at about 21. And then all the way down here, the major support about 18K. Brief interruption here, guys. Did you know that 75% of traders have accounts under $25,000? This creates a huge problem because even if you double that account in a year, which is almost impossible, you're still only making $25,000. Introducing Hydra funding, where you can potentially get access up to $500,000 in capital. All you have to do, guys, is sign up for a challenge account, which is going to give you potentially access up to $500,000. And if you earn a 10% profit in this demo account without going into a 5% loss overall or a 4% loss in a day, you will then pass their evaluation phase and, yes, get access to an account with the selected size account. And now, instead of trying to double a $10,000 account, you could potentially earn only 10% on a $100,000 account to earn the same level of profits. And the benefits of this are huge. Rather than risking your entire $10,000 on one account, you can use just $1,000 to potentially get access to $100,000 in capital. You can trade crypto, forex, stocks, CFTs, gold, oil, everything under the sun, all on MT4 and MT5. If you're interested, if you have an account under $25,000, like 75% of traders out there, you're not going to make any money with that account because it's too small. Get access to pro level funding and pro level capital with Hydra funding. Link's going to be below. It's hard to say what's going to actually happen, but as of right now, I am more heavily short, and I actually did just get out of my longs. In the markets, I made about 30 to 40K back of the 100K I lost on this actual squeeze by trading a few coins. One was OP, which had a nice, beautiful kryptonite breakout to the upside. I traded this first little spike, sold for about 8 or 9K, and then I took advantage of this spike here, made about 15K, also made about 10 or so K again here on GMX as we broke out to the upside. Now, both of these are potentially just getting started. It really depends on if there's a continuation in Bitcoin and Ethereum or not, and also the US stock market, but these are the beginnings of huge breakout patterns. I've already locked in on my gains, so I'm a little bit cautious about the already big move on Bitcoin, impending potential pullback that's going to come at some point. We just don't know exactly when that is. We can only look at support and resistance levels and kind of gauge, okay, there's going to be some sort of liquidation event where a lot of people that are long, who are over leveraged and continue buying at extended higher prices, do get liquidated, and there's going to be some selling pressure to the downside, of which that is getting close to that level as Bitcoin reaches 25K. So I'm definitely cautious about holding anything long, and I'm more so looking for that liquidation 10% pullback on Bitcoin, which will definitely crash a lot of the altcoins, whether the crash is a temporary thing or the confirmation of the bearish trend overall, and we continue back down to new lows, or it's just a 10% pullback and you can turn it into a trade and actually make some money. The way to kind of get around that is always be locking in gains as soon as you go into profit. Then if you want to hold for a longer term outlook, if you're thinking that the bear market is going to continue, you can hold a fraction of it, but never only shoot for one direction, because a lot of times you go into profit and then it goes against you, such as when I was down 100K on Bitcoin, I was back to only down about 20K on Bitcoin because I went heavy short and all the altcoins pulled back 10 to 15% on a dip. I could have locked in those gains, but I didn't. I got greedy trying to make all my money back when I could have got out for about a 20K loss instead of a 100K loss. So I also get caught up in this as well, still after 20 years, but typically I try to lock in gains in both directions, long and short, as the stock price or asset price goes in my direction. And then if I want to hold for a longer term trade, I'm continually holding a smaller fraction of it as it goes in my favor. But as it goes in my favor, anytime there's a big spike to the upside, you should be locking in profits. Anytime there's a big spike to the downside and you're short, you should be locking in profits. So those are really the only two charts that I like as of right now for potential breakouts is OP and GMX. We already traded both of those and now they're extended in their move. So I don't really have any desire to continue to trade those as of right now. But if we look at shorts, ONE is one that I've been continually adding here short as we reach into this descending channel here. Also, if we draw this line across here, we're coming right into this level here. So I believe that this could be definitely a high probability area to be getting short right in this range for a potential pullback down to this support level at about 0.014 cents on one. I'm also still short ADA. All these coins, guys, they have these super long extended moves to the upside. There's going to be a liquidation event at some point where we see a 10 to 20 to 30% pullback in a very short amount of time. When that happens, I don't know, right? It could be up at 50 or 60 cents before that happens and I get stopped out. So that's the problem with shorting, is you don't know exactly when the actual top's going to be. All you can do is look at past resistance levels to then make a trading plan around when that liquidation event might actually trigger it and happen. I'm also still short SHIB and I'm also still short Solana. As you can see here in my account, I'm currently down not a whole lot on a lot of these positions, but I locked in most of my gains already. Again, I'm up about 34K since I lost that 100K back in, because this was about 400K, lost 100K, then I deposited $200,000 back into about 500K. Now I'm up to 534. So I've gained back about 34K of the 100K I already lost, of which I'm not scared about that. I'm going to make my money back. It just matters when that's going to happen after that hiccup that I had on the Bitcoin short. But overall, guys, I think we're leaning in favor of a near-term pullback on Bitcoin around 25K, which would bring us back down to about 22K or 21K on Bitcoin. Ethereum is also attempting to break out here, where the next resistance levels are at about 17K and then also about 2K. As of right now, this was a very bullish breakout to the upside at about 1400. We'll see what happens if it can sustain these prices above about 1670. As of right now, it's just day one of the breakout. Now, if this turns into a bear trap and actually fails to hold this level here, and then Bitcoin fails to hold that level as well, that could be a potential pullback. Then if we break down below the trend X here at about 1560, the next support level would be right around here at about 1300 to about 1350 for the pullback area on Ethereum, which would be about a 21% pullback if that is the case. All this boils down to is what's going to happen with the earnings tonight of some of the biggest companies in the world: Apple, Google, Amazon. I believe all three of those are coming out today, which is going to be a monumental news event, and it's either going to spike prices up to the upside or spike prices to the downside. Another major factor we have to be watching here, guys, and I've been looking at this chart quite a long time now, months, the US dollar index, or DXY. We broke down below these previous lows, and if we can create a bear trap confirmation here on this chart, which would mean we break down below the lows, come back, retest near $100 here on DXY, and then close back above this level about 101.10 or 101.12, that would be a bear trap confirmation. And typically some of the biggest moves you see are fake outs. And if we see a fake out on this dip on the US dollar, that's going to bleed right into all the assets across the board. That means that US stock market's going to dump, Bitcoin's going to dump, and also means that gold is going to dump. So that's why I'm short crypto, I'm short gold, and I'm basically getting long the US dollar by way of getting short GBP USD, looking for a pullback here. And I'm also accumulating some shorts in gold as we push up towards 2000, and I want to be taking profits between 1900 and about 1800 in this level in a grid. Anytime we move into this level, I'll be locking in gains the entire way. And we start pushing up above about 2020, that'll be my cap limit of where we might just continue to spike up even to brand new all-time highs here on gold. So that's kind of the current analysis right here, guys. I think the most differentiating factors that we got to focus on right now is, one, is there going to be a bear trap confirmation on the US dollar, which will then create a spike to the upside on the US dollar. That's going to bring down all the assets. And also, more importantly, what's going to happen with Google, Apple, Amazon earnings that are coming out later today. By the time you watch this video, they might already be out, and we'll see all this stuff happening in real time. So anyways, guys, that's a wrap for today's video. Like, comment, subscribe, and I'll see you in the next one.